Today is one of the best times in history to start investing in silver, and there are 5 ways to profit from it. Each way has its own pros and cons, so make sure you stick around to see which method of investing in silver is the best for your situation. Welcome to my channel. I'm Rich Mogul, and today I'll introduce you to a type of great investment that no one is talking about. Before we start, don't forget to subscribe to my channel and click the notification bell so you're always first to learn how to invest and make money. Silver and other precious metals have been used as an alternative to stocks and bonds for a long time. When times are hard or there are a lot of inflationary pressures on the economy, some investors turn to silver to hedge their bets or make safer investments. Investors like silver for many reasons, but many see it as a way to keep their money safe in uncertain times. Others see it and other precious metals like gold as a way to protect themselves from inflation. For this last group, buying silver is a way to make sure they have a currency that can't be taken away by printing more money or by the Federal Reserve making decisions that could hurt the economy. You can invest in silver in a number of ways, from buying it outright to buying shares in companies that make it. Here are the top 5 ways to put your money into silver. How to buy and sell silver in 5 steps. Each way to put your money into silver has its own risks and benefits. 1. Coins or gold bars. Having coins or bullion that are made of silver is a satisfying way to invest in silver, both mentally and emotionally. You have it in your hands and can use it if you need to. And in some cases, it's not that hard to get to. For example, US coins made before 1964 contain about 90% silver, and you can buy them at the value of the silver they contain. If the price of silver goes up, you can make money on silver coins and bullion, but that's the only way to make money here. Unlike a good business, the physical commodity doesn't generate cash flow. Silver can be bought from local dealers and pawn shops, as well as online dealers like APMEX and JM Bullion. If you go to a more specialized dealer, you can buy bars instead of just coins. Risks. It's easy to pay too much for physical silver, so keep track of the spot price to make sure you're getting a good deal. Also, if you need cash quickly, you might not be able to get the full value for your physical silver, especially if you have to go through a dealer. Be careful when you buy collectible coins, because you'll probably pay more for the fact that it's a collectible, which means you're overpaying for the silver it contains. Lastly, silver can be stolen, just like any other physical asset, so you'll need to keep an eye on it and maybe even insure it. 2. Silver futures. Silver futures are a simple way to bet on whether the price of silver will go up or down without having to own silver. You could even take physical delivery of the silver, but most people who speculate on the futures markets don't do that. Because futures contracts give you a lot of leverage, silver futures are a good way to trade in the silver market. In other words, you only have to put up a small amount of money to own a large amount of the metal. If you're right about where silver futures are going, you can make a lot of money very quickly. If you're wrong, you can lose it just as quickly. Risks. In futures contracts, the leverage works both ways, so it magnifies both your gains and your losses. If the market goes against you, you'll have to put up more money to keep your position. And if you can't, the broker will close the trade for you, leaving you with a loss. Futures are risky, so they are best for traders with more experience. Most of the time, you'll also need a big balance in your account to get started. Lastly, only a small number of online brokers let you trade futures. 3. Exchange-traded funds, ETFs, that own silver. You can buy an exchange-traded fund, ETF, that owns physical silver if you don't want to own silver directly and want a lower risk option than futures. You could make money if the price of silver goes up, but you won't have to worry as much about things like theft. An ETF that owns real silver will give you the return on the price of silver minus the expense ratio of the ETF. ETFs also have another benefit. You can sell your silver at the market price, and the money is easy to get your hands on. So, you'll be able to sell your funds at what is probably the best price, and you can do so any day the stock market is open. iShares Silver Trust, SLV, and Aberdeen Standard Physical Silver Shares ETF are the two main ETFs that own physical silver, SIVR. Traders can also bet on the silver market through ProShares Ultra Silver, AGQ, an ETF that owns futures contracts. This is a better short-term bet than a long-term one, though, because of how the fund is set up. Like gold and other commodities, the price of silver can change quickly, especially over short periods. But with an ETF, you can avoid some of the bigger risks that come with owning physical silver, like the risk of theft, the fact that it's hard to sell, and bad prices when it's time to sell. 4. Silver mining stocks. If the price of silver goes up, you can also profit by buying shares in companies that mine the metal. You can gain in two ways if you own a miner. First of all, if the price of silver goes up, the company should make more money. In fact, if everything else stays the same, silver miners' profits will rise faster than the price of silver. Second, the miner can make more money by increasing production over time. That is another way to win with silver besides just betting on the price. Risks. When you invest in a single company, you need to do a lot of research on it to make sure you're buying a good company that can do well. Some miners have never even dug a hole in the ground, let alone taken silver out of it. Also, mining stocks can be volatile because their profits depend on the fluctuating price of silver. 5. ETFs that own silver mining companies. You can buy an ETF that owns silver miners if you don't want to do a lot of research on silver miners, but still want the benefits of owning a mining company. You will have more exposure to miners and less risk than if you just bought one or two mining stocks. ETF Database says that Global X Silver Miners ETF, SIL. iShares MSCI Global Silver Miners ETF, SLVP, and ETF MG Prime Junior Silver Miners ETF are all silver miners, SILJ. Risks. A sector ETF makes it less likely that a single miner will do badly, but something that hurts the whole industry, like the price of silver going down, is likely to hurt the fund a lot. And pay close attention to what's in these funds, because not all of them are the same. Some may give you more access to better companies, while others may focus more on junior miners that are riskier. Is silver a good way to make money? Many of the same things that make investors like gold and precious metals in general also make them like silver. Some of the most important ones are returns. There have been times when silver did better than well-known asset classes like stocks. A store of value. Silver can keep its value and even grow in value over time, which gives investors a way to make money. Liquidity. The silver market is usually very liquid, and certain types of silver assets are also very liquid. Less linked to other asset markets. One thing that makes silver appealing is that it is less linked to other markets, like stocks. This means that silver can be used as a hedge against other markets. Diversification. Because silver is less related to other metals, it can be used to diversify a portfolio, which can lower risks and increase returns. Silver doesn't have no risks or bad points, but it does have some. Since silver doesn't make money on its own, it may not be easy to tell when it's a good time to buy. In contrast, stocks may be cheap because the company behind them is making money or has good plans for the future. Second, silver doesn't make money like a business does, so investors who want to make money must rely on someone else paying more for the precious metal than they did. On the other hand, people who own stocks or ETFs in a business can make money when the price of the commodity goes up or when the business makes more money. If you want to learn more, don't forget to subscribe to my channel and click the notification bell so you're the first to see my new videos.